This pandemic, of course, has affected virtually every part of our lives: our health, our education, our jobs, our communities, our families, our economy, even the way we conduct business here. To explain, I generally don't speak with a mask on. I'm doing it. We have a lot of young people and others here who work in our process who, at this time of year, go home to see their families around the holidays. I would hate for anyone to be unable to do so because somebody tells them they sat too close to me for too long a period of time, and as a result, that they have to stay here over the holidays. So in an abundance of that caution, if anyone has any problems hearing me, they'll let me know, and we'll figure out how to work through that. But the pandemic, the nationwide lockdowns were then, and they remain now, a big crisis for America's small businesses. In March, as the pandemic and the lockdowns began crushing small business, the Senate and bipartisan members of this committee responded by coming together and enacting what I think is, without a doubt, historic support for small businesses. One of those lifelines was a program that was entirely new. It didn't exist, had never existed before, and it was put together in a very short period of time. It was built upon the network of community banks that the SBA has worked with for many years to deliver needed capital to small businesses. And that support was what is now known as the Paycheck Protection Program. And in this crisis, we called upon every inch of America's financial infrastructure to help deliver that help that it brought through small businesses. And I think it's fair to say that it was not a perfect program, because no government program is possibly perfect, not to mention one put together in 6-7 days and implemented over a short period of time. But I do think, without a doubt, it is clear that the Paycheck Protection Program has been the single most effective part of the CARES Act that was passed, and one of the most effective federal relief programs in modern history, delivering more than $525 billion to small businesses and nonprofits all across the United States. It had two goals. The first goal was to help workers keep their jobs, to provide funds so that employees didn't have to lay people off, keep workers attached to employment. And second, and related to the first, was helping small businesses to be able to stay open, not have to permanently close their doors. Under the crisis conditions in which we created the program, to achieve these goals required setting a third goal: to deliver the support that PPP would provide, and do so as quickly as possible before those small businesses ran out of time and money. I think as we look back, I believe it is more than fair to say that the program accomplished all three of those goals. The goal of worker retention, small businesses receiving PPP report saving up to 55 million jobs. In May 2020, the first jobs report after the full amount of PPP loans had been dispersed showed the biggest month for jobs gained on record since 1939. It beat economists' expectations by over 10 million jobs. As to the goal of helping small businesses, more than 5.2 million small businesses and nonprofits received PPP loans. By the end of May, the U.S. Census Bureau reported that more than 70% of all small businesses in the entire country, 70%, received PPP loans. As to the goal of delivering assistance as quickly as possible, the SBA approved nearly $350 billion in PPP loans in just 2 weeks. And this is by far, and by any measure, the fastest delivery of funds at this scale for a fiscal policy program in modern history. This program was a tremendous success in meeting the goals that we created it to meet, and now I believe, personally, it is time in a more tailored and surgical way to do it again. The work that the first round of PPP began, though successful, it is still incomplete. The pandemic is still raging. Lockdowns are again being contemplated, placed on small businesses, and/or restrictions continue to be in place, allowing restrictions on their ability to operate. Consumer activity in certain sectors is falling. And so by enacting a second round of tailored PPP assistance, we can help build upon the success of the first round, fix some of the problems that were identified through that first round, and protect small businesses through the winter as we walk that bridge towards what we hope will be a widely distributed vaccine that gets us to a point where we're no longer dealing with many of these restrictions. As we consider that second round, this hearing provides a good opportunity to look at and take stock of what we learned in the first round. The priority of speed that we gave the program, however necessary, it did create some initial problems in implementation. For example, the average loan size approved at the beginning of the program was larger, and a number of companies that had access to capital elsewhere received PPP loans. That problem was resolved, yet the program's critics persist in saying that the program was skewed towards larger businesses. The fact is, 70% of PPP loans, 70% of the actual individual loans went to small businesses that had 10 or less workers. The average business receiving a PPP loan at the end of the program had 13 workers, and 80% of all funds went to businesses with fewer than 200 employees, even though all businesses with 500 or fewer were eligible. Another example is related to fraud. We've learned a good deal about the need for inspection and oversight by the administering agencies. However, the evidence so far does not suggest a fraud rate in PPP that is higher than that of any of the other programs in the CARE Act. And the evidence suggests actually that PPP suffers from a lower risk of fraud, much lower risk than the EIDL program, which is an existing program. And one of the reasons for this success has been the fact that the banks and credit unions delivering PPP are still subject to federal anti-fraud regulation. And this public-private partnership, in combination with increased SBA and Treasury oversight, allowed us to strike an important balance of ensuring fraud protection while also distributing program funds in a timely manner. Another example is with respect to the equitable distribution of funds to small businesses owned by people of all backgrounds, all races, and ethnicities. As we explored in a hearing this past July, we've learned that the importance of community financial institutions like CDFIs and the technical assistance grants through agencies like the Minority Business Development Agency. Though there was certainly a disparity at the program's beginning, the heroic work of community financial institutions such as these helped to overcome much of that. There was a survey completed by Goldman Sachs and found that by the conclusion of the program, 93% of Black-owned small businesses applied for a PPP loan, and of those who applied, 95% received a PPP loan. According to the SBA's demographic survey data, minority-owned small businesses received a higher percentage of PPP loans than their relative share of business ownership in the U.S. Black and Hispanic-owned small businesses accounted for 7.8% of total small business. They account for 7.8% of total small businesses. So 7.8% of the small businesses in the country are owned by African American or Hispanic, and yet they successfully received 10.6% of the total PPP loans dispersed. So despite some negative narratives that I've seen, I've heard loud and clear about the success of PPP from small business owners throughout the country. For instance, Between Pixels in Marietta, Georgia said, "We applied for and received the PPP loan, which helped us focus our energy on pivoting our business model. The funds allowed us to reassign staff to these opportunities rather than cut positions, which ended up making up for the revenue we lost from our traditional services," end quote. Mike Zafrani, the owner of Liberty Landscape in Jacksonville, Florida, said, "If I had to sum up the PPP loan in one word for us, it gave us confidence. We would be in a much different position without it." That's the end of his quote. So these represent only a small portion of the comments we've received from small businesses about the program. As I said at the outset, while there are certainly better days ahead with the promises of successful vaccine, we should have great confidence that certainly before this time next year, we will all be living in a very different situation. We do have an immediate need over the next few months that requires action. Small businesses need more help to make it through this winter. Given a potential second wave looming and impending government lockdowns in different jurisdictions, it's vitally important. I think perhaps the biggest evidence of all of how this program has worked is that in a time in which it is difficult for the parties and even within the parties to agree on many things, Congress has voted unanimously on 3 separate occasions to fund and enhance PPP. And I believe it is far past time for us to come together and do it once again. It had been my hope we would have done it months ago. But I hope we'll do it now. I can't imagine not doing it and what its implications would be. So as I said, today's hearing will provide us an opportunity to evaluate the first round, to discuss the future of the program with all these goals in mind. And I look forward to hearing from today's expert panel on their experiences with PPP. And now I'm going to recognize the ranking member, Senator Cardin, who will deliver his opening statement.